You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. All right, Moose, I hope you're doing well today. Yesterday, we talked about 5 stocks trading at their 52-week low that were affected by tariff or potentially affected by the fear of something that could ever or may not happen because, tariff rules, they change every 15 minutes. So don't put too much pressure on that. Do not be concerned. The economy is not going to fall into an abyss for the rest of your life, and it's not going to be the end of capitalism. Just take a deep breath, guys. The market is down a little bit. It's about time, actually. We do not get that many recessions and even bear markets these days. It's good to see. It's healthy for the market to go down. If you're concerned about anything else, well, I invite you to my webinar today, moosemarkets.com/webinar. We're going to talk about 5 step-by-step thing that you have to do to clean up your portfolio, make sure it's super strong. And if you're concerned about the current state of the market, this is a webinar for you. I'm going to also answer all your questions. So there's going to be a live Q&A after the webinar, so you can ask me pretty much anything about anything. So just having a lot of fun. We did that webinar yesterday with our members at Dividend Stocks Rock, and they loved it. So we had so many questions. It was just a big blast. So anyways, moosemarkets.com/webinar if you want to attend live or if you want to get the replay. If you're not on my mailing list, you're not going to get the replay. So there you go. Now let's move on to 5 stocks that could be of interest. First one, Alimentation Couche-Tard. I'm getting it every single day about question about this one. I'm a big fan. I've been holding this one for several years. Great holding in my portfolio. One of my largest holdings, actually. But as of late, tough economy, bad quarters. The stock is going down for a while, almost maybe 17, 20% down from its peak. Yeah, it's been bad. It's been bad for 5 quarters. So, again, chill out. It's 5 quarters. What's 5 quarters in life? You have to always put those things in perspective. Another thing that scares a lot of investors is the fact that they're going after 7-Eleven convenience stores. So they want to buy 7 & I, the company holding the largest network of convenience stores in the world. People are scared about the debt, about the deal, about this, about that. First, just a drama story so far. There's no deal on the table that has been signed. Actually, quite the opposite. So don't go crazy. And I just want to remind you, it was the same story when they acquired Circle K, which ended up being a transformational acquisition, one of the best thing that they ever done. So don't worry too much about this. Of course, right now, they have a plan to grow organically, which is not really working. So I'm curious to see what's going to come up next quarterly earnings at the end of March. So I'll be definitely quite interested to see what's going on. Another one that is not really affected by tariffs that much, GoEasy. They're definitely more concerned about a Canadian recession in this case. So GoEasy is doing leasing, lending services, using their arms such as Easy Home, Easy Financial, LendCare brands. They're into a lot of short-term financing at a higher rate. They're magical touch, great underwriting process to write those loans. They are able to assess the risk and play on that thin line where you charge more interest because there's a little bit more risk, but you're still getting paid. Latest quarter actually was really good. Revenue up 20%, earnings per share up 11%, a dividend increase of 25%. So you may be thinking, well, why the stock is going down with double-digit growth across the board? Well, here's the thing. GoEasy is the type of business that is actually looking good on prom night when everything is going well. Now, a lot of investors think that we may head into a recession, and of course, it's going to be rougher for companies like GoEasy. So this one, make sure that you know what you're doing. Not a big financial institution either in terms of capitalization. So just be careful about this one. Definitely a roller coaster, but I just wanted to mention it. Searia SIS.to, another small cap. Again, be careful about small cap. They look super interesting. They show some interesting growth perspective, but they're also going up and down like crazy. This one, 75% of their business is for accessibility. So they're actually known for like their lifts and their elevators and modifying like cars to help people that have like reduced mobility. So this is what they're doing mostly. They also have 25% of their business for patient care. They're known to grow by acquisition. Their CEO is quite aggressive in that, but I mean, still good. The revenue increased by 4% last quarter, earnings per share up 37%, and the quarter before in December it was like up 26%. So they are on the roll. They expect to keep on growing, but expectations were actually higher than that. So that's why the company took a toll. They said that they are looking for more growth opportunities in 2025. So you can expect that more growth by acquisition news will come this way. But again, small cap, always a bit shaky. Just be careful about that. Guys, before we move to the last two, just want to highlight the fact that the webinar is today. Moose on the Loose. Moosemarkets.com/webinar. I'm going to answer all your questions, so make sure to register. Super important if you want to see the replay. Second to last, Toromont Industries, TIH, Caterpillar's largest dealership in Canada. They also have another branch, Simco, that focuses on recreational refrigeration system. It's about 13% of their business. This one, ironically, I think it's again a matter of being concerned about a potential recession in the country, because the revenue in the latest quarter were up 7%, earnings per share were up 2%, booking increase were up 3%. So not so bad in terms of numbers. I mean, not staggering, but I mean, everything was still up, which is pretty good. Toromont earnings were affected by higher interest charges. And I guess a lot of people are scared because 38% of their business is related to the construction sector, 20% from the mining sector. And then if we have a slowdown, well, maybe they're going to get hurt. On the other side, I'm thinking, well, if there are tariffs involved and the government is looking to like avoid or get out quickly from a recession, a good play in their playbook is usually to spend more into construction because it creates a lot of jobs. There's a lot of investment to be made. And let's be honest, we kind of need investment in our infrastructure. So that could be an easy way out. We'll see how it goes. It's in my portfolio. Super happy about it as well. So I own Couche-Tard and Toromont Industries in my portfolios. I have no shares of GoEasy or Searia or the next one that is a super speculative play. I highlighted it last year. I've actually talked about it several times over the past 5 years on this one, but I always mention the same thing. Great potential, crazy volatility. Be careful. So Ammon Power, HPS.A.to, they are selling dry type transformers. And those transformers, they're great for data centers. And the company is getting whacked because we're scared that we're going to have like lower investment in data centers because some AI models are requiring less energy than expected. So those expectations changed a little bit. And of course, US tariffs. So this one is kind of like a play on both. Yes, it could have been part of like the tariff edition, but as you can, if you go back to yesterday's episode, covering 5 stocks in 10 minutes was already a big feat. So I decided to include this one here. The earnings are actually tomorrow, so we're going to see how it goes. But yeah, so the stock was skyrocketing for like about 2 years, a lot of promises, but now a lot of businesses in the US. Most of the hype is related to AI. I told you before, if you're investing for trends and like the flavor of the month, you may get burnt. This is what's happening with Ammon Power right now. Maybe it's going to go back up though. So just wanted to highlight it once again. Very promising, very volatile company. All right, want to wrap this up with favorite plays. So from the tariff edition, I would say CNR, could definitely be a solid play. Still, I'm going to repeat it, but I do have it in my portfolio. And for today's podcast, I would say Couche-Tard, definitely. I think that the management is going to be able to turn that around, mostly because they did that 100 times before. But again, you have to do your due diligence. You have to make sure that you understand what you own and why you own it. So no buy recommendation here. Just wanted to highlight 10 stocks. If you think that they were helpful, please go on Spotify or Apple Podcasts. Take 2 seconds, click on the 5-star rating. It's going to help me a lot. All right, guys, that's enough for today. Tomorrow, we're talking about a big question. Is it worth paying 1% fee to an advisor at retirement? And the answer may surprise you. All right, Moose, that's enough for today. We're going to talk again tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to the Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.